Hey guys, well, welcome back to our weekly live event. And I'm Pascal. It's good to see everybody again. Today we're going to go over how the mortgage fee that we're going to actually increase the mortgage fees to closing on loans. And that was actually pushed back till December of 2020. So that's really great because they've been constantly increasing fees on refinances and it's been getting very expensive. So today we're going to be going over why was it pushed back, and why are they constantly increasing fees on these mortgages? So there's actually a number of reasons, and we're going to go over those details today. Been gymming it in quarantine. That's awesome. Yeah, I've been hitting the gym hard too. It's exciting. I actually found out that I did get first in the competition because I had to take a flight right after I was finished lifting, so I didn't get to get my trophy, my medal. And I got into Worlds. So November 8th, I'll be going to World Championships for powerlifting. It's really awesome. It's really exciting. So great stuff. So how's everybody's day been? How's everyone's week been? What's up, Black Strass? What's going on, Notorious? Good to see everybody again. Thanks, Mallory. I appreciate that. She says, congratulations. Vinit says, I like following you. Awesome. That's awesome. I appreciate that. Karik says, congratulations. Thank you. It's really exciting. If you guys don't know, I live in Tampa, Florida. And right now it's about 10:30 at night. And I get up pretty early the next morning. So I'm up today to basically educate you guys, teach you guys finance, and help you guys get to the next level. I got my first offer accepted. That's awesome. That's awesome. As you guys know, though, I've been warning everybody, unless you're getting like 30% off on the purchase price, I would not buy anything. I would wait till next year. The prices should come down a lot. I'm going to guess 20 to 30%. We're going to have significant problems in the economy. And unless you're getting a huge discount, don't do it. Abe says, been great and laid back weekend. That's awesome. It's been a pretty chill weekend in Florida. It's been raining a lot. Rock says, loving the good vibes. Try to stay, I try to have good vibes. I try to stay pretty chill. I'm always just trying to remind myself, no matter how difficult it gets, that, that God is for us. And, God is always looking out for us. So no matter how difficult things get, things are always going to get better. Things are always meant for good. So it's difficult at times to accept it and understand it, but in the long term, it always works out good in the end. So it's try to keep positive and keep moving forward and making the right decisions, because just because something bad happens at that moment, those are some bad cards you were held at that moment. But you got to make sure that you're playing those cards properly in a positive format, because what will happen is something good's going to come 6 months later. But if you were like in a depression those 6 months because that one negative thing that happened to you, it can't keep you down. Because if it keeps you down, then you won't be ready for that good thing that was meant for you in 6 months. So I'll give you an example. I'm going to say it's probably almost been like 5 to 6 months ago. I lost one of my businesses. A lot of shitty things happened, and I lost a $1.5 million business. Okay, so that sucks. It's very frustrating. It's very frustrating, as you can imagine. But during that time, I just said, you know what? I can't do anything about that because it was a really bad, shitty business deal, and there's nothing I could do within my control to fix it. And at the end, I just said, again, as always, I've gone through many difficult times, and I said, I'm just gonna do what I can do. What can I do? and I just took the time to build up my other businesses. And in doing so, a lot of great things are coming that I'm going to be able to do in the next few months because I didn't let myself get into some type of depression because of the negative thing that happened. I was able to move forward and focus positive energy on doing bigger and better things, preparing myself for those things. And I'm getting the benefits for them. If I had stayed in a rut and was upset about what happened that I couldn't control, I wouldn't have been able to make the decisions I made to put myself in a proper position to succeed on this next thing. So again, when it says when God closes one door, he opens another. So stay positive. You have to be optimistic, looking to find opportunities to grow and get better and to do things that are going to benefit you. Because in this business, in any of my businesses, and in any of the businesses that you ask me advice in, it is those that find a light that win. It's not the pessimist. It's the one that finds something good and keeps digging and is able to create something great from it. That's able to win and find ways to win and be successful and be profitable in a difficult time. Remember, the biggest companies are built during recessions and depressions, the biggest ones. So yes, we're going to go into a recession, and highly likely we're going to go into depression. But for those that work hard and find ways to succeed, they're going to benefit greatly. Michael says on YouTube, because I'm on YouTube as well, guys. We love you, man, and love all the information you give us. Thanks, Mike. Appreciate it. So Abe says, in this live session, okay. How do you get motivated? Alex asks, how do I get motivated? I'm doing a lot of stuff that I like doing. I really think finance is cool. Like I'm really like kind of a geek in that way, you know? So I can really geek out on finance and go into like the nitty gritty of macro and microeconomics, of the nitty gritty details of how companies run, and how to optimize. So I kind of find that stuff cool. Just like someone would go into stats and who their favorite basketball player, or how like people will create their fantasy football league and so on. I kind of do that in the finance world, and I think it's really cool. So one, just being able to do that is enjoyable to me. So that's how, one, I'm doing what I really enjoy doing. I'm doing what I love. So it's easy to just do it. Part two, many times when I was like hitting rock bottom and what I was working on in that particular situation, I would ask myself, okay, if I have to lose this company now and I have to go back to just working a 9 to 5, you know, would it be worse than what I'm doing now and not making any money? And I basically came to the point, I was like, you know, I'd rather just do this and not make any money and just kind of eat shit until I could figure out how to get past this and just live at home at my mom's when I was younger. I was like, I'd rather just live at home with my mom and just eat shit and just keep doing this, because I'd rather do this than anything else. I mean, I can always go back to that, but I don't want to. I don't want to quit. Let me just keep trying. Let me keep pushing and moving forward. And, you know, thank God it worked out. Like, it was really tough. It was like 3 years of really tough times after the 2008 recession. But I was able to climb through it. I was able to push through it. And it was really a great learning period, right? And even the company that I lost, where I lost like $1.5 million, that's why another thing, I believe in multiple streams of income, because when that thing happened, it wasn't a catastrophic hit to me because I have multiple other companies that I own too. So, but it was I learned a lot in that business. So I was able to take knowledge and experience from that one and apply it to these other ones and make the other ones greater, you know? So always something you could learn, something you can benefit, right? Like, a loss isn't a loss unless you give up. A loss is only a stepping stone to becoming stronger, right? When we work out against resistance of weight, which breaks us down. But the breakdown doesn't matter, because you build up off of that breakdown. So we're here to build up. I take vitamins every morning and every night to build stronger. We eat right, we exercise. It's the same thing what we're doing here. We're learning, we're digesting, we're rebuilding, we're growing. So when the times come where in the past you couldn't handle a situation, you'll be strong enough. That's why you see how hard I work out. You'll see a lot of this in Manny Koshman. He'll say the same thing. You'll see him working out all the time. You'll see me working out all the time. Between Wing Chun Kung Fu, Brazilian Jiu-Jitsu, powerlifting. Recession's coming. It's going to be bad. People are going to be very scared. But I'm going to be physically, mentally, spiritually, emotionally, financially fit and ready to handle it. So when everyone's freaking out, I'm centered. And I can be able to go forward and make the proper decisions, not fear plays. But when everyone's afraid and running away, I'll be running in. So I'm going to talk about the main topic of today, and then I'm going to go into the Q&A, all right? So today's main topic, and thank you for everyone for all the love, for all the hearts, for all the thumbs up on YouTube. I really appreciate that. It really means a lot to me. And if you haven't, smash the like button, follow, share with your friends, because really that helps out with the algorithms. And I appreciate all the love and encourages me to do more for you guys. So today's topic is about how Fannie Mae and Freddie Mac, they were going to increase rates again, or not rates, but fees on mortgages. They already did it last month. They were going to do it again, and they put another half point, and they decided to push that back until December. Trump said push it back till December. That would cause about an additional $1,400 in fees in your closing costs. These are straight like points fees. If you guys know, if you're doing a standard refinance on your home, non-cash out, the rates and the fees are not that bad. They're actually pretty good. But if you're doing a cash out deal, the fees are pretty high. If it's an investment property, the fees are pretty high. Do I still think it's a good time to do it? I think it's a great time to do it, because right now is your opportunity to take the money out while you can before values drop. To get it out while you can while rates are low. Secure it, stabilize it, and be ready for the other properties that are coming. And when you have a low debt coverage ratio, it's called your DTR or DCR, it makes it easier for you to get more deals. And that's part of what I teach in my course, Foundations of Personal Finance. For those that don't know where it's located, the link is in the bio. So they were going to raise rates. And the reason why were they going to raise rates? Why were they going to increase fees half a point, which is roughly on average about $1,400. Right now, they're behind $6 billion in different mortgage payments and fees associated to the people not paying their mortgages. So there's so many people that did not pay their mortgages. They are $6 billion behind. So Fannie Mae and Freddie Mac is trying to make up for some of that money with all the people refinancing by charging them more money up front to cover some of the losses that they're incurring. I think from the data, it looks like a lot of properties are going to be coming up for sale. From the data, a lot of mortgages for commercial properties are going to be coming up for sale. Like 25% of hotels did not pay their July mortgage. So there is billions of dollars in hotels that are going to come up. 38% of hotels in New York City did not pay their July. So New York, San Francisco, LA, Miami, Texas, different parts of Texas, a lot of hotels are coming up. So I'm getting excited because I really want to buy a hotel in Clearwater Beach. Like I've been talking about it, guys. I'm putting it up to God. I really hope I can get it. We actually hosted an event. Was it Hilton? Yeah. It's Hilton. And they were kind of being racist against us because I was hosting an event for about like 300 people on average that were there. But then on the big event, it was like 500 to 700 people came. And they were like really being like racist against us. And it was kind of like, it was hard to even believe it until like I saw it and experienced it myself. And I was just like, this is not real. I have 300 people here that are like young professionals. How are you acting this way towards us? And we're all like Middle Eastern, Aramaic people, which is weird because other people were doing the same exact thing, but they didn't say anything to them. So I'm thinking it would be sick. It'd be sick if I bought the hotel that was kind of like racist towards me. That would be sick. That would be really cool. So and it's right on the beach in Clearwater. But again, if I do get it, it needs a lot of work because the walls are so thin in between the rooms. Like you could be quiet, just having a normal conversation, and the person in the next room could hear you. So really, it needs like almost like a full gut job. It needs better insulation so you don't hear each other in the different rooms. Just better quality for the people, and then just making it a great place to be. You know. So what's up, Abe? Abe's like, yo, Pascal, my financial spiritual animal. That's me. So yeah, guys. So all right, no cursing, guys. All right, warning, guys, no cursing. I will block you guys if you curse. So all right. So to go into the point is they're looking to raise fees, not interest rates, but fees. Now, technically, if you don't want to pay all those fees, you could just say, hey, I'll take a higher interest rate and I won't pay those fees. That is an option. But obviously, we want the lower rates as well. So bye. Okay, banned. So to the point, fees are going up, refinance while you can. I have a mortgage company. If you guys need help with your refinances, DM me, hit me up. I'll be more than happy to help you with your refis. So yeah, they're trying to recoup the money that they're losing from all the people not paying their mortgages. They're about $6 billion behind right now. So the question that I get, that it's very, the common question that I'm getting now is, since rates are so low, should I refinance now because I'm going to get a lower payment? Should I care about the fact that the values are going to drop? So I'm going to say this. If you need to buy a property, like I bought this house here, it's like exactly the house I wanted to own, and the exact location is everything I wanted. And it's right by my mom. It's what she wanted. That was her dream. So everyone was happy. My mom's happy. My wife's happy. My kids are happy. Everyone's happy. So there's a thing in economics called Udels, right? There's Udels is an arbitrary assessment of value or an arbitrary product you're getting. So in this product, we're going to say joy. There is this product of joy, and there's a certain amount of joy you can get from something. So if you're going to buy something and it's going to make you happy, but it's not going to make you broke, then you could probably get it, and it doesn't have to be the best investment, because the house you live in is really not an investment. It's an asset, but it is not an investment. And the mortgage you have on it is a liability. So if you do it wrong, you can own a house and have more of a liability than an asset. But there is factors where it could make sense and it cannot make sense. The point is, if that's what you need, that's what you need. But if you don't need it, then don't get it. And don't get it just for interest rates. Getting something because of interest rates is a bad move. Getting something to save taxes is a bad move. You buy an asset for the asset. That's why you buy an asset, for the asset, as an investment. Now, if you can get awesome interest rates as well to make it even better deal, awesome. If you can do special terms to make it even a better deal, awesome. But when you make your money is in the buy. So if the buy is not good, if you get a sick interest rate and you get sick terms, it doesn't always make sense, because if the buy is bad, if you overpay. So So if you think of it this way, if you're getting it for 3% now, and you're going to go and pay market price right now, I think prices are going to drop 20 to 30%. So even if interest rates went up, you still own it at a lower purchase price. So you could be like, well, you're paying higher interest. That's correct. But if, as a primary residence, you can write off that interest expense as well. So it won't, it nets out that it's just because you got a lower interest rate doesn't mean you should overpay for the property. And also, the Fed said they're going to hold interest rates down for to the end of 2022. So I think you could wait a year to buy a property, get it for a cheaper price, and still lock in the lower interest rates. Now you're going to ask me, how do I know that it's going to be a lower price? All foreclosures, all forbearances, everything's been pushed back to at least the end of this year. So this is basically not just the ones from COVID, even the ones prior to COVID, they're not even going to be looking at it to the end of the year, beginning of next year. So these are even the evictions that happened prior to COVID, they're all going to hit in January. And then all the COVID foreclosures can start in May. So when people start hearing about all these different properties coming to market, it's gonna scare people and the prices are gonna come down. Now the point is this though, people are gonna say, well, Pascal, the houses aren't actually gonna start hitting the market in May. It takes time to do these foreclosures. And I am gonna say you are correct. But in the stock market, they have this thing that says the price of a stock is baked in with all the information in the market. So all the information is already in the price, even though that thing didn't happen yet. Like, for example, when NETE was going to merge, which is an electric car company, was going to merge with another company, the price automatically jumped up prior to the purchase because it was baked into the price. The day of the purchase, you didn't have to wait to the day of the purchase to get that bump up in price. It happened prior to it because once everyone knew it was happening, the price will reflect it. If they know a stock's going to go down, people already, and the company's not going to do well, people will drop the price prior to they having an issue with their income stream because they know it's going to happen. So when people start realizing that housing is going to be really bad in 2 years from now, 3 years from now, in May of next year, once they say, okay, all these foreclosures are now hitting the books, they're going to start the process, people are going to start lowering their prices. What's going to happen is all people that want to sell are going to start pushing to sell their property, and they're going to get scared, and they're going to start lowering it and lowering it and lowering it, just trying to get their property sold. And we're going to see that. Right now, you're going to say, well, Pascal, there's nothing for sale, and these properties are going so fast. You are correct. There's a lot of people moving from up north down south. A lot of people that are moving within the same neighborhood from a smaller place to a larger place. Because when the second wave happens, they want to have something more comfortable. So that is my opinion of what's happening and why it's going to happen. And if you're planning to refi and stay in a property, it's better to do it now before rates and fees go up and before property values go down. That's my opinion. Do your own research and make the decision that works out best for you. Because just because it's a smart financial decision doesn't mean it's the best decision for you in your particular situation. So let's go into the questions. Christian says, hey, Pascal, I'm a big fan. Thanks to you, I've educated myself about the market a lot. You're welcome, Christian. Thanks for following. And make sure you share it with your friends, guys, because the more friends that actually study and learn with you, the stronger your group gets, and the more you all can grow together. All right, I'm going to get into that question too. Next question here is from Dylan. It says, should I buy a condo at 1920 to rent out while I still live home, still with my mom? I would say no, it's better to buy a 2 to 4 unit property. Teen Ambition says, I'm from California and I've only seen that glass dome over pools in Florida. Is it like a Florida thing? So Teen Ambition, that's not a glass dome. That's actually that's metal. And in between the metal is actually a screen mesh. And that screen mesh will keep out like leaves, and it keeps out mosquitoes and bugs, and mostly mosquitoes and bugs, to be honest with you. And then it also keeps out leaves from the pool itself. So this way, the pool stays clean. We don't have bugs and mosquitoes eating us up alive while we're chilling outside in the pool area. But yeah, we have a lot of them in Florida because we have a lot of mosquitoes in Florida. Funny thing is, mosquitoes. Florida is not the number one place for mosquitoes. I think Chicago was the number one place for mosquitoes, according to that big pest control company. I forget their name. So Dylan says it's a mesh screen. Yep. All right. So next question. How did you start off in real estate? So at 14, I learned about the real estate game. I learned about how you can buy property. The government puts up 80% or more of the money. You only have to put up 20%, sometimes as low as 3.5%. Then you can get a tenant. The tenant lives in the property and pays all your bills, and then you can keep the difference. And all the appreciation of the property, you get to keep. The bank doesn't keep that. You also get tons of tax write-offs, and then you could grow and get more and more and more properties. And that idea at 14, when I heard that, I thought that was like one of the coolest things ever. So then I spent basically 5 years studying the game and figuring out how can I do this. And I learned taxes, I learned credit, I learned savings, investing, I learned how mortgages work, I learned how to property manage. And I went out and got a whole bunch of mentors that were investors. And I learned the game. And this is back before YouTube and everything else. So you actually had to go out and meet people face to face, and you had to do something for them. There wasn't really courses you could buy. And if you could buy them, they were like sick amount of money, like $40,000. So I went out and I learned it. And then at 19, I bought my first duplex. About 6 months to a year later, I bought another duplex. And then 6 months to a year from that, I bought a 7-unit property. And then basically in a 3.5-year period, I went from 0 units to 23 units by the time I was 23. So that's what I did, the basics of how I did it. On YouTube, if you go look, my name is Pascal Corcus. If you look me up on YouTube, I have a YouTube station, subscribe. I have a video on there, and it's about 17 minutes. And in 17 units, I go through the numbers, the detailed numbers of how I went from 0 units to 23 units by the age of 23, and like the down payment amount, how I did my lines of credits and cash out refis, and just constantly churned next. And lots of content, lots of information on YouTube out there from my page. Cool. Ta says you're the best, bro. Thank you. I appreciate it. Do you have to be really good at math to major in finance? To be honest, answer is no. You don't. Your math skills in finance are like addition, subtraction, multiplication, and division. Originally, I like math. Originally, I was going to school for chemical engineering. So when I was in high school, like the summer semester of high school, I took like physics 2, differential equations, calculus 3, and I'm telling you, if you get a finance degree, you are literally doing algebra. If you get an economics degree, you're doing almost no math. In economics, most of it is concept and understanding supply and demand and effects, cause and effect. So it's not really numbers based. And to be in the real estate game, you do not have to be good at numbers. You do not have to be good at numbers to be good at the rental game. It's just most of the people that are really good in the rental game, really good as landlords. I'm talking about like worth $500 million. I know many people that are worth like $500 million. They don't have a 4th grade education. Like I'm being serious. They didn't pass the 4th grade, and they have millions, hundreds of millions of dollars in real estate. Because the idea is very, very simple. This year, there's properties out there that are worth $500,000, $1 million. Next year, the $500,000 property is going to sell for $350,000. The $1 million property is going to sell for like $650,000. You don't have to be a rocket science to say that's a good deal. And if you're really lucky, you might be able to get some of those $1 million properties for like $400,000. In 2008, I knew a guy who bought $1 million property on the water for $100,000. And he resold it 10 years later for $1 million. When the bank didn't have money, he had cash, and the bank went to him and sold him like 25 properties. They sold him like $400,000 properties for like $65,000. So that's the dummy, rich, crazy, sick deals that you get eventually when you establish yourself as a player. So in the beginning, it's hard, and you build up and you build up, but eventually you come to a point where you are really comfortable and you've really established your name in the game where people start coming to you and giving you deals. Like one of my mentors, like he's worth hundreds of millions of dollars. And I'll go and I'll sit with him and I'm like, so where are you finding deals? He's like, I don't know. People come to me and offer me stuff. People ask me to buy stuff from them. And I'm like, that must be nice. Again, the dude's 60 years old and been doing it since he's 20. He's been in the game for 40 years. That can't be like, that sucks, man. That's not fair. It's fair. The guy's been in the game for 40 years. So people will come to him, and now he's really into buying mom and pop restaurants, like in like chic, cool like locations. So he'll go and buy this like $1 million property with this kind of crappy old restaurant, or $500,000 property with a crappy restaurant for like 50 cents on the dollar, half price. He'll buy it. He'll rent it out to someone else that really wants a restaurant in that location. They'll do a lot of the work to fix it up, and he'll collect his money off of it. And that's just his style, his thing, which is really cool. I want to do. I'm really into hotels. Like me personally, I've been really getting into like the idea of owning hotels and motels and making them like very niche, like very specific niche style hotels. So that's I think my next thing that I'm gonna like swerve into that stuff. And then I also want to get into plazas. Where everyone's like plazas are horrible, I actually want to get into plazas personally. I think it's going to be a great time to hop in when everyone's hopping out. So, yeah. So the question is, when do you think the properties are going down? I think we're going to start seeing a downward trend May of 2021. I definitely think May 2021. We're going to start seeing something after the election. After the election, we're going to see something. Because to offset the amount of the economic loss that we experienced from COVID, and honestly, most of it was caused by the decisions that many governments around the world decided that they caused the economic problem. And that problem, in America at least, would total about $10 trillion. They basically created a $10 trillion hole. So the only way to fill that hole is to put in $10 trillion. They need to spend it. It needs to be spent. It needs to go to people. People need to spend it. It needs to go back to businesses, and it needs to go through. It needs to cycle through the system because people need the money so they can spend it and live. That money is going to go to businesses. Businesses are going to have their products purchased. Well, when their products are being purchased, it needs to be at physical locations because then they hire people. And then those people get money and they spend it and it goes around in the system. That's how the economy works, right? It's like we are all part of the same economic body. So when they shut down all these different businesses, and most of them are small businesses, and they basically they took out the blood. Money is liquidity. Money is blood. So then when they took it out, they basically are like amputating all these different parts of the economy, and they're going to literally shrivel up and die, and they're not going to come back. They can't come back. Now, that's a problem, right? The only way they could do it is to put blood back into the system, which is money, and they have to put in about $10 trillion. So far, they only have a spending bill about $5 trillion. So they would need to spend another $5 trillion to fill that hole. And that's going to be very hard to convince people to spend another $5 trillion. Just remember, we only spent like, I think $1 trillion in 2008. We're going to spend 10 trillion on this one. That is like 10 times the total amount of debt our country has spent in the last 250 years. We would spend it in 1 year. So 10 times the amount of money we spent in 250 years, we would spend that 10 times that amount in 1 year. That's a very hard thing to convince people to do. And again, like, it's kind of like the medicine is the side effects of the medicine are almost just as bad as the disease itself. So it's kind of like, what are we going to do? But if they don't do it, we're literally going to go into a Great Depression, like legit Great Depression level. Because there's a lot of money. We're talking about S&P. We're talking about all this stuff and all this money, and everything's doing fine. Those are companies that don't have a lot of employees. They're not mom and pop America. Like mom and pop America, like 30% of them currently are suffering bad. And when they fall, it's going to have a ripple effect to cause at least 50% of America to suffer, and then more and more. So the issues are going to be great, but we need to resolve them. All right, so let's get back to the questions. Kristen says, would you recommend investing in gold at the moment, since the recession should be hitting us soon? I personally have been buying GOLD stock. It's a ticker, GOLD, not physical gold, but it's called Barrick's. They're a gold mining company. And then recently I heard Warren Buffett, Berkshire Hathaway, bought about half $500 million worth of that stock. Short term, it's going to be fine. But long term, I think it's really where it's going to make your money. So I'm just putting some money there, holding it, just waiting, and letting it go up, and then later I'll sell it when I want to buy more real estate. So I'm just holding it there as a hold. But that's me personally. I also own some silver, but that I own in physical form. Dylan says, what's a good price for a 2-unit duplex in Florida? So it depends. You could buy it in the hood for $60,000 for 2 units right now that is in like bad shape. Or you can buy them in an area where I want to be in the areas that I want to be in. They're going for like $300,000 to $400,000 for a 2-unit duplex. So there is no such thing as a good price, where like I have people that I know that are buying duplexes in a part of time that I don't feel like buying in, and they're getting their duplexes for like $100,000. And then they'll see me go buy a duplex in the part of time that I want to buy in, and I'm paying $125,000 per unit. So I'm paying $250,000 for the duplex. So I'm paying 2.5 times the price for a duplex than they are. And my duplexes are normally smaller than theirs are. So they're actually getting more square footage than I am. But I'm buying in a market that I want to be in, where I think the upside is, currently I'm buying it for $200 a square foot, but by the time I'm done, or $150 a square foot, but by the time I'm done, it's worth like $330 a square foot. So the value the value add is great. So I see things differently, and my style of investing is different. I don't really look at cap rates, and things like that. I look at other factors, other metrics. Good question. Tim Ambition says, do you think there's a better chance at having a high net worth with commercial real estate? Manny Cashman, Grant Cardone. So let me clarify. Commercial real estate is a very vague, it's a very wide variety of properties. So Manny Cashman style, Manny Cashman buys commercial real estate, mostly office, and some commercial, where in the sense of like strip centers. Grant Cardone buys mostly apartment complexes, 300, 500 unit apartment complexes, and B+ to A+ markets, and like quality of product, because there's A through F in the sense of the build, and there's A through F in the sense of location. So he buys more premium apartment complexes, simply. Manny Koshevin buys office buildings and commercial plazas. So they're different investing styles, okay? And you can be in a commercial game and just be, you can own storage units. You can be in the commercial game that you can own warehouses. So there can be a lot of different stuff you're doing in the commercial game. So higher net worth, it depends. It's an ebb and flow, right? There's an ebb and flow. Like there you can make crazy money in certain markets, in certain styles. And then the prices get jacked up so high, it's like no profit anymore, no money. So when people talk about like rental properties, I was saying like there's really not much out there that you can find that you're actually going to make money on right now. So I was being very, very selective of what I was buying, and I was only able to find one property per year that was profitable. So it depends, right? That's why you'll see me. I buy many different types of real estate, not just I own an office building, we own some small plazas, and we own the residential stuff. So it depends. Does that property have value? Is that property worth something? That is what matters, So it depends. Is it harder to get a deal on a property at a younger age when you are not offering 20% upfront? No and yes. No, because the bank will still give you a loan if you don't have 20% down. Yes, because if you are one of 5 people offering to buy the property, and all 5 people are offering the same price, one of the 5 is offering all cash. The other one's offering 50% and 50% loan. The other one's offering, 20% down and 80% from the bank. And then you're offering 3.5% down and, 96.5% from the bank via an FHA loan. The likely person, if they're all the same price, saying all the same offer, all the same terms, the person that's going to be selected is a cash buyer because there's less contingencies to close on that deal. So no, it is not technically automatically harder, but if you have other people bidding against you, the terms of your contract is what makes you better looking than others. So, yeah. All right. Hello.
What you talking about?
We're talking about business.
Oh, shut up.
That's cute. All right. So Fredo says, you talked about buying gold and silver now. Do you think they'll hit a ceiling after housing tanks? No, I think I think gold and silver, personally, I think gold and silver is going to be good for like 2 or 3 years. Not until the economy starts stabilizing and getting back to normal. So I think it's going to be 2 or 3 years. How are you? I'm doing good. Thank you. All right, let's get some questions in here. Thanks for all the positive stuff. I got a lot of "you are the best," stuff like that. All right. The idea of down payment, taking on mortgage, and getting a tenant all makes sense. When starting off, how much in unexpected costs came up? So, my first property, the septic tank went bad within the first 6 months, and that was $4,000 in additional unexpected costs. I was planning to change the tile and paint the inside, paint the outside, do different things like that. But I was not expecting to spend $4,000 on a septic tank. So you shouldn't blow every dollar you have on purchasing the first property. You still need cash reserves. And the bank is going to actually expect you to have some. The more you have, the better, to be honest with you. Because again, you don't know what's going to come up, and you really want to make sure you can take care of it, get it fixed, so you can put it back for rent. Personally, I did spend almost every dollar I had to buy the property and kept very little cash afterwards. So, but I am more of a risk taker. I'm not as afraid of the risk. All right. Gabby says, Cuzzo, super proud of where you've come from 10 years ago. Keep killing the game. Thanks, Gabby. Gabby's actually grew up with Gabby. Awesome. Gabby, how's LA doing? How's LA out there? I heard it's like quiet. Rustam says, can we pay down payment with credit card? Technically you could, by doing you can pull the cash out of the credit card and use it towards a down payment. The problem is when you do that, when you say you have a $10,000 credit card and you took $10,000 out, you're at 100% loan to value, which is going to tank your credit score, which then is going to make it hard for you to get the financing. And if you do get the financing, they're going to charge you so many points and fees and percentage on the loan. Now your payment went up. That can also cause you to not be able to afford the loan anymore. And all those other problems are going to come from it. So you technically could, but it doesn't, it's almost never a good idea. Now you can take $10,000 out of your 401k, and you're going to be able to use that money towards your down payment. So that is a way you can get the money for that. And right now you can take $100,000 out of your 401k without getting the penalty charge, and you can use that towards buying real estate as well. And if it's investment real estate, there is ways where you can do a cost segregation model right off the $100,000 you brought in, and avoid paying any income taxes that. So it's a case-by-case basis. So definitely do your research and have your accountant to check on that for you to see how it would affect you personally. But it's a good option. Okay, let me see here. Would you encourage someone to invest in rental properties in Central Florida? So Texas, Arizona, and Florida are thought to be good places to invest in long term. What specific property in what city on what street, you have to know that market to know what is worth it. Like, again, and within a 1 hour drive from where I am, I can buy duplexes under 100,000, and I could buy other duplexes at $1 million. So it depends what you're looking for. So it really is not a black and white answer to say Central Florida. Is Central Florida a good market? It is a good market, but that doesn't mean it's going to be good for you. Each particular property is good. I'm planning to start a small business. What is your best advice? The best advice I would give you is study your business, study your market, study your competition, understand this better than anybody else. And if you do that, when things come, when problems come, you're going to be able to handle them. You're not going to freak out. You already know about the problems and you know how to resolve them, or you know who to talk to get the solution. So I have friends in the insurance business. I'm in the insurance business, but I have other friends in the insurance business. I'm an accountant. I have an accounting firm. I have other friends that work for accounting firms or own their own accounting firm. Same thing in the real estate investment business. I have my own, and I have other friends that have their own investments. When I don't have the answer, because there's going to be 1,000 scenarios and you're not always going to have the answer, it's good to have a network of people you can go and ask their opinion, their advice on that scenario. Because every scenario is similar, but it changes a little bit, and the way you act, the way you respond would need to change as well. So it's good to have that network to ask so you know how to respond. All right. Blocked. All right. What's up?
Good evening. How are you? Can you see me?
I can. Can you see me?
I can. How are you?
I'm doing good. Thank God. How are you doing?
Good, good. So question, I was wondering if you could maybe explain how the loans work that allow you to purchase a property and convert the garage into an ADU.
So if you're talking about a construction, one of the construction loans, there is FHA construction loans, the FHA 203K loan. Now, the 203K loan, most of them I hear the max amount of money they'll let you use to renovate a property is about $60,000 to $80,000. Each state and area has their own max, so you have to do your research for your market. Now, $60,000 to $80,000. That sounds like a lot of money to some people, but if you're looking at a property that has major problems, 60 to 80,000 is not going to do much. So it's more so you're buying a property that needs a new roof maybe, but the roof is in horrible shape. It's not for a property that has mold issues and needs new plumbing, new AC, new electrical, new roof. Like if you're looking to spend 150,000 on the property, a lot of the properties I buy, that's the type of properties I look for, is the properties that need like 100 plus on the property. The FHA for 203K loans don't really help because 60K doesn't go that far. It's really for a property that's like in a good area that has good bones, but you want to put in a new kitchen, new bathroom, things like that. So if the property overall is good and all you want to do is convert the garage, then yeah, like that could work out. And again, when you're doing that 203K loan, you have to use contractors that are approved for their program. So it's not like, and a lot of times when you buy a house, you want to do the work yourself and you could pull your own permits as a homeowner. With that loan, you have to get a contractor that they approve. And when you get a contractor, it's a lot more money than you doing it yourself. Like you could do a kitchen remodel for like 10K, but you get a contractor involved and you're like 30K.
Right. We're in Los Angeles, and here we have a housing crisis. So they have allowed for a lot of homes to have for you to be able to convert your garage into an additional dwelling unit. And so there's where it wasn't allowed for a long time. So now a lot of people are trying to buy homes and then convert the garage into an ADU and increase the property value, rent the ADU out, help pay for the mortgage, But I was wondering about the loan that would allow you to actually do that on the purchase side. And I know you can always refinance and try to pull cash out and so on and so forth, or take a second out, or but I was wondering if
so you would have to. So if you're looking for a standard FHA 203K loan, again, it's like 60 to 80,000. Now you're gonna have to do more research on the Los Angeles, California market to see if they allow a little bit more than that. Now, normally when it's above that, you're gonna do like a purchase construction loan. And when you're doing a purchase construction loan, that is another option. Now, normally when you do a purchase construction loan, you have to have experience. Like you have to be in the game. You have, like, I get those type of loans for, like, I just bought a property that is like 4,000 square foot house that I bought it for 280 and I'm going to spend like 150 on it. And I got that type of loan, basically a construction rehab loan for that property. But you have to have experience to get those type of loans, or you're required with more money down. So the more money you have down, the less experience you have to have. But the less money you want to put down, the more experience you have to have for a construction loan. But for the 203K loans, you only need about 3.5% down. So really, like,
construction loan, that'll give you actually whatever capital, however much capital you really need.
Yeah. So like, let's say you bought a property for like $500,000, but you want to spend another $500,000 on it. You know, you could probably get that type of loan, but you would need probably at least $200,000 for them to give you that type of loan. Maybe $300,000 if you don't have experience. But if you have a lot of experience, you can do it. You could do that $1 million project for as little as $100,000. So like sometimes on these deals, like on $1 million deal, I only need to come up $100,000 because the investor, well, I'm calling them investors because when you go into more specific type of loans, they are investment banks that give you the loan. They're not government backed. They're private backed. And they'll give you these loans and they give it to you based off of what they're like your resume, your experience in the game. Like, okay, this guy's done like 20 of these. He knows what to do. Something happens, he can fix it. He's not just someone that watched, HGTV fix a flop. What is it called? Flip or flop, yeah. Right. And they're like, oh, I'm gonna go do this, and I'm excited, I'm geeked up. Yeah, it's not like that. So like, when you have that, then you're able to get like, like when you're at a certain level, like that's why a lot of people, when they're like, oh man, getting money's not hard. If you got a deal, you can find investors that are willing to give you money, investment banks that are willing to give you money. You'll get a lot of money thrown at you. Finding a deal is the hardest part, like in a real deal.
Right.
And I'm not talking about like let me just give you my thing. You buying a house that's like okay, and then you're like, I'm gonna convert the garage into another living unit and I'm gonna make money. And me doing that is gonna make this deal worthwhile. That's not a good deal to me. Because you are working to make it a good deal. If you have to work to make it a good deal, it's not a good deal. I should go and buy the property and do nothing, and it should be a good deal. And then I get really great financing, and I make the profit from that financing. And then I add another unit, and I make the profit from that. And then I make the property more energy efficient, so it makes my water bill less, my insurance less. If I'm paying electric because it's an Airbnb, it makes my electric bill less. Then I make the profit from that, from those smart decisions. But if I have to do every single thing right, the financing right, the energy efficiency right, add the extra unit right, and at the end of all of that, then I'm going to make some money, that's not a good deal.
Right.
You know what I mean?
Right.
So, so like when, like Manny says, you make the money in the buy, 100% true. You make your money when you purchase the property. You make your money in the buy. So if you're not buying right, you're not getting a deal. And I'm honestly thinking right now, I know they're allowing that with the whole additional living unit. I think next year in LA is going to be way cheaper. It's going to be way cheaper when things really hit the fan. Like, how bad is it out there right now?
In terms of what?
In terms of people working, in terms of people being able to go out and do stuff. I've heard of a lot of people leaving LA, leaving the city, and just going out to other areas, just where they have more freedom than being as locked down as they are right now.
I don't know, because I really don't have a lot to compare it to besides what we see on the news, but people are they're doing well. Everybody's inconvenienced, obviously, but there's a lot of people out of work. But I think for the most part, people are hanging in there. I don't see a whole lot of for sale signs going up, or, I don't know if the middle class is how much they're suffering. You know what I'm saying? It's hard to tell. I feel like maybe in 6 months, 8 months, the shape. You're gonna see the aftermath. But right now, everybody hanging in there. So it'd be interesting to see how things go next year. If the property value falls, it's opportunity. But even in 2007, when when the world went to hell in a handbasket, the Los Angeles city didn't lose any property value. All those way out places near Palm Springs and just these places that are way out where the land's abundant and cheap, and they were doing massive building. Those houses plummeted like a rock. But the stuff right here in the city, didn't really lose value. So I don't know, how things are going to go now. It'll be interesting to see though. What state are you in?
I'm in Tampa. Tampa? Can you hear me? Hello? All right. So yeah, a lot of people that I talk to regarding the rental side of things, people aren't paying rent. And regarding the eviction side of things, they can't do any evictions for 12 months. So a lot of properties aren't going for sale because it's really bad to try to put a property up for sale when you have tenants not paying their rent. And then a lot of people are not paying their mortgage, so they can't put those properties up for sale. So that's part of the reason why the reduction in supply as well. But we will see, right? We got another 6 months, 8 months till we see how it shakes out. All right, let's see some more of these questions. Abe says, my friend is watching this with me and he just subscribed to this channel right now. Awesome. Christian says, I have 50 grand saved up just sitting in the bank. Would that be enough for a 3 to 4 unit home? It would be my first house, by the way, FHA loan. So obviously that question is determined on what area you live in, right? 50K in Florida to buy a 4-unit property in certain parts of Florida, in the decent part of Florida, yeah, you could, 50K will get you a decent property, probably like in a decent area, pretty good area, about $400,000, you can get a 4-unit. $50,000 down, that's going to be like closing costs plus 10% down. So yeah, it would be fine. But if you're in like LA, getting a 4-unit for $800,000, it's a question mark. It depends. Do I think you're going to find some decent deals for about 800 grand? Maybe a triplex in LA, a decent triplex in LA. I think you're going to be able to find something like that sometime in the next 2 years. So, because again, in May, prices are going to go down, but I don't think that's going to be the bottom. I think it's going to be gradually going down over a 2-year period before it starts going up. Dylan says, what kind of tax benefits do you get as a landlord? So there's actually a lot. You can get the 1031 exchange. You can get a bonus depreciation. You can get the Section 1071, I think it is. You get multiple different types of depreciation and write-offs. So there's a lot available, a lot. How do you calculate debt coverage ratio? So your debt coverage ratio, basically it's all of your debt, the cost of the debt, divided by the income. Actually, if you're looking at it for a rental property, it is your total income, right? your total income minus your expenses, not including the loan. So let's just say you bring in, my one project brings in, I think $23,000 a month. $23,000 minus $6,000 a month in expenses. So it nets $17,000. So $17,000 is the numerator, the bottom number, and the mortgage payment would be the top number. So then you divide the mortgage payment divided by the $17,000, and that percentage is your debt coverage ratio. Now it could be inverse, where you can have the net amount divided by the mortgage payment, and then it's like you can get a number that way, and that's a 1.25 ratio. 1.5 ratio is what the banks are usually looking for. So the lower the number, the worse it is. The higher number, the more conservative the deal is. So normally, if you're like at a 1.5 ratio, debt coverage ratio of 1.5, you're actually pretty conservative, and the banks would like that loan, because you're making a lot more money than a mortgage payment. So it'd be very likely to be able to make it, even if you had a lot of vacancies. Good question. Christian says, I live in New Jersey. My bad. So New Jersey's, New Jersey's expensive. So if you're looking to get in really good areas, it could be a lot of money. I mean, there's certain parts of New Jersey where you can get a duplex for like 400, 500,000. I mean, in Patterson, you can get a duplex for like 300,000 for a triplex. So, I mean, it depends where you're trying to live and where you're trying to invest. So, what I would say is this: try to get the best location you can and get as many units possible in that good location or a B location. It's better to have a better location than units. Some people want a lot of units. It's better to be in a better location than a lot of units, because, but you don't have to be the best of the best location. You don't have to be in the A+ area. You can be in a B minus area and still do well. So guys, been on for over an hour. Thanks for all the questions. I really love answering your questions and helping you guys out. Remember, link in the bio is my course, Foundations of Personal Finance. I'll basically teach you everything that I learned to get you to 23 units in a 3.5 year period. That's what I was able to do if you use that information properly. Hundreds of hours on YouTube. So if you're not on YouTube, check me out, Pascal Corcus, and subscribe. Lots of content on there. I wish you all the best. God bless. I'll see you guys later.